Hello there, Forex traders. Welcome to this weekly heads up at Admiral Markets. My name is Chris, and we're going to take a look at what kind of opportunities we could expect this week. Today is the 9th of September 2013, and we'll take a look at the currency market and the charts in just a second. Before we do that, the risk disclaimer explaining that trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. Please pause the video to read the entire disclaimer. And I do thank you for your attention on that. So today we're going to take a look at the dollar index. And we're going to take a look at the euro dollar intraday analysis and the dollar yen long term. So there's a lot of interesting stuff coming in this video. But I do want to quickly mention that we have a live trading room presented by myself on Tuesdays, Wednesdays, and Thursdays from 7:45 a.m. London time for about 1.5 hours. We also have educational webinars presented by me and Tarantula on Monday, today at 5 p.m. London time, or Thursday, 6 p.m. as well, 5 p.m. to 6 p.m. So those are definitely worth your time, and we use those educational webinars. We use the theory for practical purposes for the live trading room. So you have theory and practice both combined here at Admiral Markets. Now, not only does Admiral Markets have great education, but it has great spreads as well. So there are a lot of advantages, and I encourage you to take a look at Admiral Markets website, for example, which we'll do right now because we're going to take a look at the calendar. This week has very light trading week regarding the news. There's not much news going on with the fundamentals. Last week, of course, was a heavy week with a lot of interest rates decisions on the euro, pound, AUD, and CAD, and the NFP, of course, on the USD. This week is a lot lighter, and there's really nothing substantial red tagged except Wednesday, the pound, and of course the New Zealand interest rate on the same day, and then some USD news maybe on Thursday, Friday. Otherwise, a very light agenda. Today, I wanted to take a look at the dollar index. This is the daily chart. And the dollar index, of course, is just an interesting guideline because many times we do trade the dollar. And logically, the dollar index giving us some clue what is happening. And we, of course, had a bounce right at the weekly support, and the weekly support is indicated by the green lines. The darker green line is a trend line, the lighter green line is a horizontal support that sent this currency to the upside after an inverse head and shoulders right in here, and the neckline was equal to the top of the trend channel as well. That trend channel broke right in here, but the up move lasted only up to the 50 fib. So what I'm looking at basically is either a break of this high for more upside. Of course, be aware of the 618 and later on maybe the 786 as potential resistance points on the dollar. But if we do break above the top, we have those spaces to the upside. Or if we were to break last week's low, maybe the currency could fall back and hook back off the same trend line for more upside. All right, so basically those are the zones I'm looking at, either a break of the top for upside, right in there, up to the fibs, those green circles, or if we were to break last week's low, we have maybe some downside possibilities and momentum to bounce to, or to move to the trend line and then bounce. Let's see what the dollar index had for an implication on the euro dollar. This is a daily chart, and you can see the dollar strength sending this euro dollar out of the range wedge, the tight wedge it was in, to the downside, breaking here our green band. The green band, very interesting. We use it a lot, or it's one of our tools we use for trend definition at our live sessions. And you can see the band, price is underneath the band now, and that will probably be a resistance. So very interesting here, the shift from the uptrend, of course, to the downtrend here on the euro dollar. The ADX has a pretty strong measurement as well, and the oscillators are now turning bearish. And if we then zoom out to this full multiple time frame analysis scale, you can see that the euro dollar is in this bearish mode. You can see prices at red colored daily candles that are colored red, but we are also at major supports as well. So maybe a bounce, as you can see the 1 hour and 4 hour already slightly indicating maybe some upside potential. So we could be in an area where we get a bounce, but the bounce to the upside will most likely find resistance for more downside. If you look at the daily chart, you can see that there's plenty of space to the downside here where the bottoms are. That's the bottom of the range. This is the top of the range. So any move up will probably find resistance at the resistance at the tops and move down back to the bottom. So that's my primary analysis here on the euro dollar. If we look at the pivot point indicator, you can see that there's a H5 at 132.50 and a H4 at 132.15. So that would be the pivot point intraday trading if you were interested in that. And the same holds true for the L4, L5 at 131.20 and 130.80. So those are the zones for bulls and bears to trade in intraday timeframes. Now that 132.50 is an important level, not only because of the Camarilla pivot point indicator, which we use for the intraday trading, but also because of the fact that we have a fib confluence right at the same level. So we'll have to see how price responds to that. If we get there, it definitely seems to be a resistance spot for the moment. Let's now move over to the dollar yen. This is the daily chart, and you can see the black lines indicating the triangle the dollar yen was in. And we already identified the probability that the dollar yen would break out. That happened, and we're hooking back to the band. You can see the band was a resistance all the way here to the downside. We've broken out of that band as well, just as we have broken out of the triangle. And now if we zoom in to the 4-hour chart, we can see a 5-wave structure here as well, and most likely we're going to get an ABC correction down to a fib. So if we put a fib on this up move, then either the 50, which already bounced off, the 618, or the 786 are likely bouncing spots for uptrend continuation now that we've broken out of that triangle on the dollar yen. So very interesting, of course, if we break either above these tops or bounce off these fibs, either of the two could be an indication that we will make that upside momentum. So that's something I'm definitely interested in. Now, if I were to be wrong and this was just an ABC correction for more downside, then it was a false break actually of the triangle, but I would only look into that and assume that would be true if we break the blue trend channel we have here on the chart. So that would be definitely a while from here. Only a break of that plus the support levels, and then a downside could be possible. All right. Until then, I am looking for either continuation above the top or a continuation off those fibs. Well, that wraps up our video today. I'm looking forward to see you in our trading room tomorrow, Wednesday, and Thursday. Tuesday, we'll be looking at swing trading primarily. Wednesdays, we'll be looking at all types of trading. And Thursday, primarily intraday trading. So I hope to see you then. I wish you good trading this week, and see you all soon. Cheers.